analysis I showed you, this trough was an 18-month cycle. Now, if you're a trough of the 18-month cycle, now if you are trading the 40-day cycle, as generally we recommend you do if you're trading end of day, then here's that cycle over here. Then this trough is also, of course, a trough of the 40-day cycle. The only difference is that the underlying trend of the cycle that you're about to trade, in this case, is positive by 1, 2, 3, 4 cycles. So it's a positive underlying trend, of +4. Okay. Let's compare that with the other analysis. The other analysis over here also has, I'm struggling with this whiteboard today, also has a 40-day cycle trough in the same place. So you would still be trading the 40-day cycle based off the same trough. But the difference is that the underlying trend here would have been neutral, 0. So the difference usually between trading two different analyses is a matter of underlying trend. It's a matter of degree. So if you're trading from this cycle trough, then you would simply be comparing a matter of degree. Some people handle that by adjusting their position sizing. So they're saying it could be a trough of the 18-month cycle, which means I'm expecting a big move. But I am about 20% undecided, and I think it might be a trough of only the 80-day cycle, as it is for here. Therefore, I'm going to reduce my position sizing. I'm not going in with such a big position size, but I'm still going to make the trade because I know it is a trough of the 40-day cycle. Okay, so that sort of wraps up that discussion. Now, somebody there, before I get into intraday, let me answer Callum's question. Andy saying, Andy B saying, why it's a 0, not +1. Andy B, Andy, I think you're probably speaking about the total underlying trend. You're quite right. If you're talking about total underlying trend, then you look at all the cycles that are longer, and I think that's what you're doing here. And well, certainly the cycles that we can see, you add up all the cycles. Usually, in making trading decisions, Hurst recommended you only consider the 2 cycles longer than your trading cycle. So, in fact, I was wrong to say it was a +4 on that first chart. I should have said it's a +2, considering only the 2 cycles longer than your trading cycle, because Hurst recommended that you make your trading decisions on the basis of only the 2 cycles longer. So that would have been a +2, or in other words, a positive underlying trend when you consider only the 2 cycles longer than your trading cycle. And on this 80-day cycle, it would have been a 0 or neutral, because you only consider the 2 cycles longer, which is, of course, 80-day and then 20-week. So +1 for 80-day, -1 for 20-week gives you in total 0. So the short-term underlying trend is 0 on this one and +2 on the other one. If you're talking total or long underlying trend, then it would have been +4 on the other analysis, and I think it might even it would have been let me see how many you include. It depends how many cycles you include. In fact, you would probably have a negative underlying trend here if you included all of them. But when making trading decisions, you shouldn't consider all of them. In fact, we've done quite a lot of research in terms of how many cycles you should include, and it's a mistake to make trading decisions on the basis of all of them. At most, consider 3 cycles. I would never consider more than 3 cycles to make trading decisions. Okay. I hope that answers that. Callum asked, could you please explain how you would trade from today? All right, trading is a huge aspect of it, Callum, but I am going to do my best. To make a trading decision, you use cyclic tools, and I've just banged a whole lot of them onto the chart. And I know you're probably cringing at all of those, so let me clarify this a little bit. Very basically, the way that you trade according to Hurst cyclic principles is you choose a cycle. I won't go into detail about how to do that now. Let's assume we've chosen the 40-day cycle, which is the cycle I would trade on an end-of-day basis on the euro to US dollar. You then have a look at the underlying trend of that cycle, and you say, what's going to happen next in this cycle? Okay, what is going to happen next in this cycle is that Okay, let me turn these off. What is going to happen next is shown to you by these projection boxes. What's going to happen next? As you can see, the first projection box was projecting a move up, which has been under-fulfilled by price. It hasn't quite been fulfilled, but the time span in which it should have happened has probably passed. So the move up is probably either complete or very close to being complete. Okay, after which we expect price to move down into this sort of area here. Now, I mean, there's subtleties that I could go into here, including the fact that on the 17th of October, that could have been the peak right there. It was right in the middle of our target period. It was simply short in price, so that could have been it there, and then price could have fallen to an early 20-day trough, which could have occurred around about here on the 20th of October. But let's not get complicated about it. The basic underlying idea is when you're going to trade, you say, what's going to happen next? What's going to happen next is that the 40-day cycle is going to come down to another trough. That trough is expected roughly mid-November. Okay? So you say, what's going to happen next? The next thing you say is, do I want to take a trade on the basis of that? What's going to happen next is the price is going to move down to another trough. Do I want to take a short trade? The answer to that question is fairly complicated, but it basically has to do with underlying trend. And if you believe in this analysis and you think this analysis is playing out, then the underlying trend is negative. So you would say, yes, I do want to trade short on this next move. I could compare analyses, but let me not get complicated. Let's say that you're convinced this is the perfect analysis. Okay, so therefore you're thinking next of trading short to catch this move down into the next trough. The great thing about trading on the basis of cyclic theory is that cycles are cyclical, right? So they move up and then they move down. So the price has moved up, as we expected, and next it's going to move down. Let's assume that you do want to take this trade. How would you know when to take the trade? Well, you would use the cyclic tools, which are VTLs or FLDs. Okay? And there are a whole lot of them, and I don't have time today to go through it again. I did a trader chat all about this, so you can have a look at it. But here you can see them. Let's have a look at the VTLs first. You see these lines. Let me zoom in. Okay. You see these lines, and they give you levels. If I double click on the chart, I can actually just simply read those levels off here. 40-day FLD high, medium, low, 20-day FLD high, medium, low. I can read those levels off there, 1.38156, and so on. Okay, so there they are on the chart, so there are. So the theory goes like this: that if price crosses below these lines, and which line you need to look at depends on how confident you are in your analysis. So you choose your level. Okay, Sentient Trader will do it automatically for you. It will use its own confidence rating, and it'll tell you how confident to be. But there we go. I've drawn those lines, and those lines sort of move in time. But you could set stop entry orders at these levels. So, for instance, for tomorrow, you could set a stop entry level at this level, or at this level. Or at any one of those four levels, and you would trade on the basis of price crossing that FLD. Okay, that's being simplistic about it, but that's all I've got time for now. You can also not only use FLDs, you can use VTLs. In fact, there aren't really any useful VTLs. Yeah, maybe the 10-day VTL is useful. In fact, it isn't based on price crossing; it's based on the median price crossing. And remember, this last day, it looks like price has crossed, but I should warn you that this is an incomplete day, so that median price is correct. If price crosses below there, then we might, if the analysis is correct, and that's a huge caveat, if the analysis is correct, then we would say, okay, we're now in the next move, and that's how you would make sentient trading. I mean, Hurst trading decisions on the basis of that. Okay, Callum, thank you. So I hope that answered that question about trading on the basis of it. Trading is a huge aspect. We have a whole 5-hour, one-day workshop dedicated to trading on the basis of Hurst's theory, and a whole separate workshop on the basis of sentient trading thing. So it's quite difficult to answer in 5 minutes. Okay, so that's trading. Now, the big thing that I know everybody wants to see is let's talk about intraday. Right, how do you perform an analysis on the basis of how do you do things on the basis of intraday? What's going to be the easiest and fastest way for me to demonstrate this? And I think the fastest and easiest way for me to demonstrate this is going to be for me to show you. I could build charts and workspaces, but that could take me half an hour. I think perhaps the best way of doing it would be for me to show you the live analysis system that we have running, which is rather like a demo of our intraday process, and I can explain it. I can explain it in terms of theoretical processes. So please just bear with me for a moment while I remind myself of this URL. All right. Okay. And okay. Okay, well that's obviously not that URL. Okay. All right. Oh, Jose's got it. Great, thank you. Right. Thank you, Jose. I'm clearly not typing. I'm clearly not typing in these addresses correctly. Great. Now that I've got that one, I can find all the others.